Dear friends, welcome to Weekly View on Markets. This week also, Nifty has fallen by around 0.61%, and Nifty has been falling for the last 4 weeks successively. So, one of the factors for this is the weakness in all the markets, that is, all the global markets. And in India, particularly, the inflation has been going up. And recently, the RBI Monetary Policy Committee meeting was there. In that, RBI has indicated that they will tighten the liquidity in the financial markets. And the outlook for the short term, due to deficient rainfall in the month of August, looks a bit clouded. The outlook, short term outlook in Indian markets is not all that good because of the monetary tightening, high inflation, and deficient rainfall. But I have looked at the charts. The charts are somewhere of, at the support levels after falling for 4 weeks continuously. We may expect a bounce back in the next week. But any breakdown from this crucial support level will trigger a technically intermediate downtrend in the market. So we will have to wait and watch in the coming week. Now let us look at the performance of different indices during the week. Nifty has closed at 19,310. It has broken the crucial support level of 19,400, fallen by 118 points, that is 0.61% for the week. Bank Nifty has closed at 43,851. It has fallen by 348 points, closed with a loss of 0.79%. Mid cap and small cap indices also have fallen during this week. They have followed the broader market. Mid cap index has closed at 37,815. That is marginally down by 21 points. That is 0.05%. Small cap index is at 11,683. So small cap index is trying to cross the crucial level of around 11,800. Every time it goes to those levels, it is facing resistance. It has fallen by 65 points. That is 0.55%. India VIX has slightly moved up. It is at 12.14. Now let us look at different sector performances during this week. Few sectors have gone up. Most of the sectors were in the red, but there is not major crackdown in the market. PSU banks have gone up by about 1.06%. Even though Bank Nifty has fallen, PSU banks have outperformed. So I have been discussing in earlier weeks that there is a good opportunity in the PSU banks, and that is shown in the PSU banks' performances. Media sector has gained about 2.34%. Consumer durables marginally up by around 0.46%. FMCG stocks up by around 0.22%. Metals have fell by more than 2.9%. So metal stocks have lost around 3% during this week. NBFCs, commodities all lost about 1%. Oil and gas sector, private banks, IT sector, infrastructure sector all lost marginally during this week, that is less than 1%. Remaining all sectors were just consolidating with marginal losses. So the overall market doesn't look very bad during this week. So we can define this as a consolidation. Now let us look at technical charts and what charts are going to tell about the market. This is the daily chart of Nifty index. As we can see, the Nifty has closed below crucial support of 19,400 and it is at support levels. I expect Nifty may pull back from here in the coming week. If it falls below this crucial support level, there will be a intermediate weakness. The chart will start making lower tops and lower bottoms. That is called the intermediate downtrend. This is the daily chart of Nifty Mid Cap Index. Even though Mid Cap Index has given a slight negative closing for this week, I don't see any weakness in the Nifty Mid Cap Index chart. And the Mid Cap Index may consolidate because it has given a huge rally. And after that, it may consolidate. But I don't see any major correction coming. This is a chart of small cap index. The small cap index also has given a huge rally, and we are seeing that at 11,800 levels, it is facing some resistance. And it is good that the index is consolidating at this level for few weeks, and this consolidation may go on for another 1 or 2 weeks. Ultimately, the small cap index is going to touch the previous high. The previous high was at 12,000, and we'll see small cap index taking off these levels in the coming weeks. This is the daily chart of Bank Nifty index. Bank Nifty index also has closed at support levels. This support line I had drawn in the previous week and I have not made any changes. You can see that the Bank Nifty index has come down to this line, and from here it is consolidating, and I expect that there will be a pullback in the coming week in the Bank Nifty. So the present level is a good support level. Traders can look at buying Bank Nifty at these levels, and 45,000 is the next resistance level. So they can buy and trade for a target of 45,000 for the short term. That is for the Bank Nifty traders. Now let us look at some of the factors affecting the market fundamentals. India's macroeconomic fundamentals continues to be stable and they are improving month by month. Of course, the inflation has slightly gone up and rupee has also moved above 83 level. RBI dollar reserves is at 602.2 billion US dollars. INR USD rate is at 83.15. Rupee has reached the level of 83 and dollar index has closed at 103.32. So all the Asian currencies have weakened. Along with that, rupee has also weakened. And RBI is keeping a close watch on the rupee levels. And RBI has given a statement that if required, they will intervene to stabilize the rupee. Gold prices have fallen from around 60,000 levels to 59,020 levels for 10 grams 24 carat. Crude price is at 84.83 per barrel. Crude price has touched around $87 per barrel. After that, there is a little bit of cooling down. So if crude prices come down below 80 level, that will be good for Indian economy and for the oil companies. FIIs have sold 3,378 crores during this week, which was matched by domestic buying of 3,892 crore. So there is a continuous support from DIIs to the market, and FIIs have been selling for last 3 to 4 weeks continuously. But DIIs have been able to match these figures. That is why we don't see a major correction in the market despite FII selling. Retail inflation for the month of July has come at 7.4. This is above the RBI target limit of 6%. The inflation majorly has gone up due to vegetable and food prices. The inflation for vegetable has gone up by 37%. Now we have seen in the markets, especially tomatoes and some of the vegetable prices have gone to record high levels. And it is expected that these prices will cool down sharply in the coming months. Tomato prices have already started coming below 100. They have touched 250 per kg sometime back. So cooling down of these vegetable and food prices will bring down inflation within the 6% tolerance band of RBI. If inflation doesn't come down, RBI may raise interest rate in the coming MPC meeting. So that is why we see market is seeing selling pressure at higher levels due to this worsening inflation situation and hawkish comments by RBI. One good thing is that Moody's rating has been maintained stable for India at BA3. Stable view is there and they have given a positive outlook for the economy. So this will help in bringing FII investments into India. Finance Secretary has stated that fiscal deficit will be within the target. It will be contained within the target of 6%. That is, for the full year, they will ensure that fiscal deficit will be 5.9% of the GDP. So this is a good thing. If fiscal deficit is contained within 6%, this will help to improve India ratings. Government spending on infrastructure touches the highest level of 2,66,567 crores for the year 2022-23. One is the fiscal deficit. Second is how this borrowed money is used by the government. Government is spending hugely on improving infrastructures, that is roads, seaports, airports, other logistic infrastructure, rail network. So these all going to result in a boost to the economy in the coming years. Overall, there are some positives and there are some negatives for the market and for the economy. Markets have corrected for last 4 weeks. I expect some bounce back in the coming week from the technically support level. Rising inflation, RBI tightening, and weakness in Indian rupee are the risks for the Indian markets. One more risk probably is Ukraine-Russia war escalation. US has approved, the NATO has approved transferring of F-16 fighters from its allies to Ukraine. And when Ukraine gets F-16 fighters, the conflict between Russia and Ukraine may escalate further. That will have a global supply chain disruption further, which will be bad for the all the global economies, and accordingly for India also. There will be some pressure on Indian economy. So keeping all these view in the markets, we may not see any immediate up move which we have seen in last 2 to 3 months. But I have a positive view for the long term, despite all these global uncertainties and domestic short-term uncertainties. The macroeconomic fundamentals remain very strong for India, and we will see good GDP growth of more than 6%. RBI has estimated 6.5% GDP growth for the financial year. They have maintained these growth rates. So we will see higher levels in the markets with a good GDP growth, and investors have to be patient and they should be invested. Those who do not have time and knowledge to directly invest in the stocks, they should invest through mutual funds. In mutual fund, money is managed by the expert fund manager. They will also get good returns. This is the time that we should invest in India growth story, and we remain invested to get the benefit of growth in our economy in this decade. By the end of this decade, our economy will be the third largest economy. Our GDP will be crossing 6 trillion in this decade, by the end of this decade. So we all have a good opportunity to invest in Indian markets and get good returns. This is all for this week. If you like my video, subscribe to my channel. You can share it with your friends. You can post your questions, which I will reply. See you next week. Thank you.